Nope, I'm not an American Ninja Warrior or an American Gladiator. What I am is an American tax guy, here to explain the obstacles that some businesses have to overcome to get a new, alluring 20% tax break. See, the new 20% discount on income earned by millions of businesses isn't automatically available to every business owner. Many will have to jump through some obstacles to get to this pit where the 20% tax cut lives. Today we'll discuss why Congress created this break in last year's tax overhaul and how businesses are trying to qualify for it. I'm Richard Rubin and we're talking taxes. We're going to hit the course soon, but first, some basic training. The core of the new tax law is a deep rate cut for corporations. That doesn't do much for the millions of so-called pass-through businesses, which pay their business taxes through their owners' individual returns. So if you're a pass-through business, like an Uber driver, or a magician, or a large manufacturer, you take 20% of your profits, deduct it from your personal income. That lowers the top tax rate from 37% to 29.6%. Many tax experts say this deduction is unnecessary or invites tax avoidance, but it's the law now. Here's how it works. To stop tax avoidance schemes, Congress created some obstacles before businesses can jump into the pit. There are two paths to the pit. Let's do this. Path 1. This thing is your obstacle. If you own a small or not very profitable business, it's easy to get past. All you need is a business and a taxable income below $157,500 for an individual or $315,000 for a married couple. You get the tax break. Congrats! But wait, what if you make more than that? Let's back up, because now we have to go down a longer, more difficult path. Here's your new first obstacle on this path. This thing is your job. If you're a doctor or a lawyer or on a list of similar service providers, you can't get through. If your reputation or skills are your business's biggest asset, same problem. But if you're in some other business, say construction or real estate or retail, you can get through this obstacle. Yay, you did it, but you're not there yet. That's because we've hit the next obstacle, and it's a fork in the road. We've got two options to get to the 20% pit. There's option A, and there's option B. Option A, qualify based on the money you pay to your employees. You can count up to 50% of the wages you pay them toward your deduction. If that number adds up to less than 20% of your business income, you can't get the full tax break and you just get that smaller amount. Option B, take 25% of those wages and add 2.5% of certain business assets. If this approach gets you a number that's at least 20% of your income, you get the full tax break. So if you run a real estate firm with a lot of property and few employees, this is a great way to get your tax break. Success! You're almost to the 20% pit, and it should be pretty easy to swing on in, particularly if you have a creative tax pro who can help you under and over the complexities. That is, if you don't get hit by an audit or regulations. Otherwise, you've got your 20% tax break. You want a little more intensity.
I want a little bit more intensity.
Can we license Eye of the Tiger for this?